In this video, I want to show you how to make your project finance models easier to audit. Okay, so today's topic is about how to make your project finance models easier to audit. And before we get into the topic, we need to ask yourself, first of all, why do I want to make the job of a auditor easier? They are getting paid to do the job. So the answer is because the audit takes time and money, right? So first of all, the contract that you received from the auditor specifies the number of iteration that they will have, the number of basically financial model versions that they will review, and anything beyond that will cost the project more. And also in terms of timing as well, if the model is more standard, is more in line with what the auditor require, then it's going to take less time for them to do the review. So it's in the benefit of all the stakeholders to have a standard model, to a model that is easier to audit. So if you want to learn more about, the financial model auditor and basically what is required from them, I have a guideline and a manual and a template about how to draft an RFP for a financial model auditor, for hiring a model auditor. You can go and download it for free and have a look at it. Okay, so now let's get into the topic. So when you look at the mandate for a financial model auditor, the contract, there are some responsibilities that are listed in the contract, that the financial model auditor is supposed to do this and that, and there are so many other points, very detailed, okay? And as a financial modeler, you should also be involved in the process of hiring a model auditor, and I explained all that in the guideline. So when we look at a typical contract, I just say in 3 lines, the very big lines of the responsibility of a financial model auditors are, first of all, to check the model mechanics. Okay, so that's the first thing, to make sure that mechanically the model works, there are no errors in the formulas, and everything works properly. So that's the first task of a financial modeler. The second task, which I think is the most important one if you're dealing with a standard model, so most of the model auditor's time should be devoted to checking the input that goes into the model and make sure that those inputs are in line with the project documents. And the last one is the sensitivity, to make sure that the model enables the user to do sensitivity, and at the same time the key parameters for the let's say the sensitivity parameters are included in the sensitivity analysis. So these are the big lines, and now we're going to go and look at them one by one and see how we can make these 3 tasks easier for the model auditor. Now let's start with the mechanical checks, which is one of the tasks performed by the financial model auditors. So model auditors, when they are the first round of review, when they do, is to make sure that the model doesn't contain this kind of typical errors in the model. First of all, one thing that they want to make sure is that the inputs are separated from calculations. They have some kind of softwares that they run, and they want to make sure that these things are basically satisfied in the model and detects this kind of errors. So one of them is separating your inputs from your calculation. So that doesn't mean that you need to have specifically a separate worksheet in your model for inputs. If you have a 1-pager model, meaning that you want to do everything within one worksheet in the Excel, that's perfectly fine. That's not an error. You just want to have a dedicated section in your sheet for inputs. Or if you are doing a modular financial model, meaning that you have different section and different modules within different worksheet, then you can have one worksheet for your inputs or several worksheets for your inputs. But when the user opens the model, knows that these are the inputs, can easily detect where the inputs are and can go and check them out and make any changes necessary. So the second one being using color code. So that's very important because at the end of the day, financial model is a a tool, right? Is like in any tool, you need to have some guidelines. A user who's not familiar with your financial model should have some kind of guidelines to know what is what. So you need to tell them that if a cell has this specification, meaning that it has like yellow background, blue font, or whatever, this is the inputs that you can modify. However, if this is blue, this means that this is coming from a macro, you don't need to change it. So you need to give this kind of guidelines to your users, and once you define these guidelines, you need to stick to them throughout your financial models. So that's one thing you'll want to do before you send your models to auditors. The next one is avoid using long formulas. That's something that is very important when somebody is auditing your financial model. Imagine if you have like 4 lines of formulas, if nested formulas, or whatever formulas. That's going to be very difficult to audit, and it's also prone to errors. So what is really advised throughout the, across all these standards is to have short formulas. If you require to have a long formula, just break it into different lines so that it's going to be easier to audit and visualize the steps that took you to get to a line of calculation. And the rule of thumb is that the Excel formula should not be longer than your thumb. I would say half of your thumb. That's my rule of thumb. The other thing is to have consistent formulas across your rows. If you are building a horizontal model, if you are building a vertical model, meaning that your calculations are within the column, I have a specific model template and a tutorial about that as well. So you want to have consistent formulas. And for that, that's very important. You cannot have one formula in one cell and another one in another cell for one single calculation. So you want to be consistent. If you need to have, different conditions, you can use any formula. So that's something that is very important. I heard from a friend, Danny from Guidelines, they call it acid test, and they just copy the formula when they're auditing and making sure that the formula is consistent throughout the calculations within a row. And I have a specific tutorial on that as well. I'm going to put the link. You can go and check it out. It's fun. It's a fun process to do. That goes with separating inputs from calculation, I would say, and that is to avoid hard coding inputs within the formula. To me, that's the biggest sin. I don't want to call it sin because it becomes like a religion, as Edward says, these standards. But it's very important not to put hard coding any of your assumption within your formulas, because that's just basically breaking the rule of transparency and flexibility in financial models. You might say that, okay, I know for sure that my tariff is going to be 5 euro cents. That's something I know, I'm 100% sure, at this point in time. So I'm going to just put 0.5% in my formula. And then you're just going to share the model with everyone, and no one is going to know what the tariff is, first of all, because it's not in the input. And then if someone wants to do a sensitivity on tariff and want to change the tariff, they cannot do it because you have hard-coded it within the formula. So that's something that you definitely want to avoid, because it's going to be picked up by the model auditors. Avoid circular reference. So that's something that is very important and very difficult to deal with in financial models. So circular references is one cell is referred to its own, and it creates a kind of loop when it comes to the calculation. In project finance model, this is very common when you are creating the sources and uses of fund statement, because you have your interest and your fees, which depends on the debt in your users statement, and you're sizing your debt based on the users. So basically your debt is a function of your total project cost, and the total project cost has the fees and interest which depends on debt in it. So that creates a kind of circular reference, and there are different ways to break the circular reference. One of them, which is the most common one, is the copy and paste. So you just copy a line and paste it as values using a simple macro. And the other more sophisticated and better way is to create a user-defined function. And this has already been done by Professor Edward Budmer, and he's still working on it and improving it, but eventually it's going to be available in the market, and you can simply break any circularity in your model by using his parallel model. But for now, if you're dealing with such a circularity in your model, I would suggest to kind of create a copy and paste, or kind of if algebra, I don't think algebra in terms of the sources and uses would work, but if you have any kind of a circular reference, try to break it and basically break the circular reference. Okay, now the last thing that I want to discuss in this section is to include a guide sheet within your model. So I'm going to now take you through a guide sheet in one of my models and show you what I would recommend as a guide sheet to be included within your project finance models. Okay, so now let's go and look at one of my project finance models, and of course you can download this demo file, and I'm going to put the link down below for you. So I have this, in this model, as you can see, I have a worksheet within the financial model, which I call a guide sheet, and it contains, first of all the color codes that I use in the models, so that when the model auditor or any user opens the model, they can straightly go to the guide sheet and know that, okay, so these are the color codes used in the model, and I go into the detail for the header, for the worksheet colors, and for the chart colors, everything I put. Maybe if you don't like the most necessary ones is to put what are the color codes that you use for your inputs, and basically I would say also for the checks and for the calculation, and if you're using any macros, the results of the macro, you want to color code them differently as well. So I would say that these are the most important ones, and of course you can put the rest of them as well. The other thing is to explain to them what are the functionalities, what are the things that they need to consider when working with your financial model. So for example, in this model I have a switch in the input sheet which enables them to go through the different scenarios in the model. So I explain that here in the guide sheet, and I say that the inputs, they are presented in form of scenarios, and you can navigate in between different scenarios by using this switch, and you can also define different scenarios yourself. So that's the first thing that I explain here in terms of the model functionality. And I also explain about the column structure in the model. So this is for like the units, this is for constant, this is for the sum. So all of it is explained here in this section. Then I explain about what are the number of worksheets included in the model, what are the function of each of the worksheet included. If you have a one pager, as I said, you might want to just explain the different section of your worksheet. Here, because I have a modular model, I explain the function of each worksheet. Then I explain also the different checks included in the model, and that's also very important when you are basically presenting your models to the auditor. Include different checks and include a master check within your models as well. I have basically here the checks you can see here. I have these different checks included in my model. And so anytime that there is a problem, for example, here the balance sheet is not balancing, it's just flagging. And to make sure that everything is working properly, you have all these checks in the model and a master check as well. And you include the master check on top of each worksheet. This way it's easier to know that something is not working. And of course, before you send the model to the auditor, you want to make sure that all the checks are satisfied and you don't have any red flags in your models. Then basically that's it. So this guide sheet is helpful for them to basically know what are the different basically standards that you're using in a model, and it's also give them an indication that you're aware of the standards and what a proper financial model should look like. And it's also good for you because it's going to give you a vision to know that, okay, these are my color codes and I have to apply these color codes consistently within my models. And you also have a basically systematic approach in building your financial models, and that's something that the auditors will check definitely. Okay, so now let's go and have a look at the second task of a model auditor, which is to check the inputs. Okay, so the second task of a financial model auditor is to make sure that the assumption and inputs are consistent with the project agreement and the reports and the different reports. So in order to make the life of a model auditor easier for doing this task is to include a worksheet within your financial model and basically report the references of each and every input that goes into your model. Put the reference next to the input. Okay, what I do personally, I include a worksheet within my model and I call it references, and this is a very simple basically table with one column for the input name, the units, and the value. And all these are basically linked to my input sheet. So I take all the inputs that I have in my input sheet, and then I put next to it where I got it from. I go so far as putting also the page number. So for example, in the first one, as you can see here, construction start date, I say that I got it from the project information memorandum, page 3, and that's where it was specified that the projects will start in Q2 2022. So this is very easy for the auditor. When they want to check, they're going to go and check that document, and if there are still issues, of course they can flag it. But if this answers their question, that's going to be just going to be traced out from their checklist. So that's an easy way that I found, and I got very positive feedback from people who are reviewing my models that make their life easier by having this worksheet within my models. Also, it is very good for me because when people are questioning my assumptions, I can straight go to this worksheet and tell them exactly where I got the information from. And that's something that you need to update. As you update the assumption, you also need to update this worksheet. But I'm telling you, it's going to make your life much easier in answering people's question on where you got your inputs from. Okay, task number 3 is to make sure, the model auditor will make sure that the model enables sensitivity analysis, and also the key sensitivity parameters are included in the financial model. So I would say that even if the model auditors, they don't ask for it, even if it was not a requirement from the model auditor, that's just something that for me, it's a must. It's one of the main function of a financial model is to run sensitivities on the main parameters, because basically what we picture in the model as the base case, expected case, is just one view of the future. So there might be so many other probabilities of things happening, things going wrong, or things going better than we expected. And all these are the things that you should be able to check with the financial model, change your inputs, define a completely new scenario, and see how your project would look like under these different scenarios. So that's what it's called stress testing. Your financial model should enable you to do stress testing using your financial model and the basically sensitivity analysis function within your financial model to do stress testing, to change parameters and see how the results will look like under the different scenarios. And another thing that is very important when you are including a sensitivity analysis is that it enables you to do sanity check on your financial model. Because when you are doing, for example, when you're increasing your capex, your expectation is that the equity IRR will go down or project IRR will go down. Okay, so these are the things that logically is expected. So if you increase your capex and your project cost, your project IRR or your equity IRR goes up, together with an increase in your capital expenditure, then something might be wrong, or there might be it might be a kind of justification for that. So you need to check that. So I would suggest that before you send your model to the model auditor, perform as many sensitivities as you can. Increase your construction period, the duration of your construction, increase your capex, increase OPEX, revenues, all the parameters in your financial model. Do they change? Even if it doesn't make sense, you say that, listen, my capex is fixed now with my EPC contract. I don't want to change it. Change it just for the sake of the sanity check to make sure that all your formulas are right and basically the model works properly. So I would say that you can do that, and it's very easy to include the sensitivity analysis in the model. I have 2 templates that you can go and have a look at them and integrate them within your own financial models. Okay, so that's it for me for today. I hope you liked this video and you learned something, 1 or 2 from this video. If you like such a content, please consider subscribing to my channel, and I hope to see you in my next video. Thank you and bye. If you want to learn how to build better financial models, check out my online course on financial model spreadsheet design at courses.phoenixmode.com.